All right, everybody, welcome back. This is another episode of the Audit Cast. This one's going to be on controls testing versus substantive testing. So it's going to be quick, right to the point, and I'll let you guys get back to your day. So just remember, there's two types of test, controls and substantive. Each controls and substantive each have their own methods of testing, and there's subsets below that, and I have another episode on types of substantive testing. But this one is just to talk about the kind of the world of each of controls versus substantive testing. So I'll get right into it. A controls test is used to ensure that controls in place are operating effectively and have nothing really to do with the numbers under audit directly. Like you're not going to be auditing a number through a controls test. And then conversely, a substantive test will give you comfort over the numbers on the financials at period end or whatever you're trying to get comfort over at any given year end, period end, so on and so forth. So that's kind of the big key to remember. Now, to go into an example, we'll start with controls because this part's a little trickier. So let's just start with an example. A simple control is that bank reconciliations are performed monthly. So let's say an accounting clerk will get the bank statements and check the amount on the bank statement against the amount of cash that the company says they have in a specific GL account. So any of the differences are investigated and called reconciling items, but they need to properly support these items through, they're going to be a myriad of different things, deposits in transit, outstanding checks, things like that. You can actually check out our auditing cash episode for a little more detail behind that. But essentially, once the accounting clerk has performed this reconciliation and kind of described what the differences are between the books and the bank account balance, then they consider their reconciliation done. And so what happens next is somebody more senior will come in and review that reconciliation. So that's the control right there, that the person, the senior person, maybe it's the treasury manager or something, is reviewing the bank recons. And the purpose of the control is to ensure that the bank balance and the book balance aren't unexplainably different, right? Okay, so this is where the indirect effect on year-end numbers concept comes in. So while like a bank recon in June on a 12/31 client won't impact the year-end numbers, how good the company is at performing this control can give us clues as to whether or not the numbers at year-end are accurate. So let's explore this for a second. So we're going to let's say you're testing a control, a monthly recon control. So let's say you pick, like in the example, June and November. So you're picking something from throughout the year and something from the fourth quarter. So if your sample size is 2 and you're a 12/31 client, you haven't tested the numbers at year end because you did November 30th recon and you did a June 30th recon for testing. So while you're not getting the balance at year end, you're not getting comfort over that specific balance. However, if the company fails that control, if the reviewer is not properly inspecting the recon and checking either the math or the backup or whatever, then that gives you a clue as to say, well, I'm not sure if their year-end one is going to be right either. Now, that's kind of the crux of it. Let's go through one more example. Let's go with approval of purchase orders. So let's say an office manager wants to buy new printer cartridges. Someone should be approving this request, and the request would be called the purchase order. So somebody should be approving that. And then also, once the cartridges physically come in and the invoice comes along with it, the invoice is just the request for payment from the seller, somebody should match the PO request to the invoice to make sure that the contents that were originally requested are what came in and the amounts match and it's the right vendor and all that stuff. So when the amount gets paid, let's call it $200, that amount goes to the company's operating expenses line item, maybe in like office supplies or something. So it'll be a P&L account. So this balance will grow over time, right? It's not a balance sheet account. It's It's a P&L account, so it just keeps growing throughout the year. So when we test the control over whether it's approval of POs or the three-way match or the matching of the PO to the invoice control, when we test that, that gives us comfort over the balances of operating expenses, but not in a direct form, right? Because we're still not substantively testing. We're just testing that that the company has approved and checked and cross-referenced all their figures to make sure that their numbers are right. But we're still at that point leaning on them. So while it gives us an indication of balances being correct or not at year end, it doesn't give us full comfort. So that's why we'd never see a full-on controls approach taken to an audit, right? You can't just say we're going to take 100% controls approach and opine on the year-end numbers. So let's get into the converse side in substantive testing. So for a substantive test, you would typically get a listing of transactions or items that sit in a given account and just test them. It's a fairly simple concept, but we'll keep going with this. So for example, let's say we want to test the above mentioned operating expense account, the printer cartridges purchase. So that will be sitting in OPEX at year end. And so when you get a listing of the transactions behind the office supplies expense for the year, you'll see that $200 purchase from, let's call it Office Depot on there. And so what you do is, if say you made that as one of your selections from this account, you're going to get the invoice to support that purchase along with the PO and maybe even the check paid. There might be some other tricky support that comes in just depending on their systems or how they purchase things. But let's just make it simple and say it's a check, invoice copy, and PO. And so what you're going to do is you're almost taking the role of the reviewer at that point and checking to make sure that the invoice amount matches what got into the financials. So what got into the general ledger, rolled up in through office supplies into overall OPEX, and wound up into SG&A. So that's a substantive test. You're testing that the number actually agrees. Whereas in controls, again, you're testing that the reviewer is properly doing his job, or the automated system is properly matching, or whatever else the nature of the control would be. Typically it's going to be some sort of review, but that somebody's checking a couple things, or somebody's checking that somebody performed that same task. So that's kind of the idea behind controls versus substantive. And again, just to kind of wrap it all back up, controls tests are performed to give an indication over year-end numbers, and you get comfort over the controls environment as a whole, whereas substantive tests are specific approaches to get comfort over the numbers that wind up in the financials. So I hope that makes sense to you guys. If you have any more questions, feel free to reach out. You can always hit us up. We have way too many ways to get a hold of us. There's the Facebook page, which is facebook.com/theauditcast. There's the Twitter account @theauditcast. Our webpage, theauditcast.com. There's a forum you can ask on. I think our email's on there. You could, I don't know how, but you could somehow ask the question on Instagram. I don't know, but we're everywhere. So feel free to reach out if you guys have any more questions. And please, please, please remember to subscribe or rate or review or leave comments or whatever on our iTunes or Shout Engine page or anywhere else you can, because as do any good accountants, we love feedback here. So we appreciate any that we can get. All right, guys, get back to work. Take care.